get ready because the news cycle is absolutely exploding, and we've got the inside track on what's shaking up the world right now. From massive financial forecasts to game-changing technical deep dives, the pace is relentless, and you do not want to miss a single second of these critical updates. We're diving headfirst into the stories that matter, the ones that are shaping industries and impacting everything around us. So buckle up, stay locked in, because this is your essential briefing for what's happening now. We're kicking things off with a look at a tech titan's financial pulse, expecting major movements based on upcoming reports. Then, we're shifting gears to unlock powerful new ways to streamline operations through smart integrations. Next, we'll dissect a sudden market shift, uncovering the hidden signals and technical drivers behind a significant intraday price movement. And finally, we'll get to the bottom of what's causing that sharp, unexpected dip, exploring the core reasons behind a major company's sudden slide. It's all happening fast, it's all critical, and it's all right here. Make sure you're subscribed and hit that notification bell so you never miss an update. Big Tech's financial pulse. Wall Street is buzzing with anticipation as a major player in the tech industry, Oracle, prepares to unveil its first quarter financial results. Analysts are projecting a healthy year-over-year increase in earnings, coupled with a significant boost in revenues. This upcoming earnings report is more than just a financial snapshot. It's a critical indicator that could heavily influence the company's stock performance in the immediate future. Investors will be closely scrutinizing whether the actual figures surpass these widely anticipated expectations, as a positive beat could send the stock soaring, while a miss might trigger a downturn. The sustainability of any price movement, however, will largely hinge on the management's insights shared during the earnings call, providing crucial context on the prevailing business conditions. Currently, the consensus estimate points to earnings of $1.47 per share, a modest 5.8% increase from the previous year, with revenues projected to hit $15.01 billion, marking a substantial 12.8% jump. The consensus EPS estimate has seen a slight downward revision recently, reflecting a dynamic analyst outlook. Crucially, the Zacks Earnings ESB, a proprietary model that compares the most accurate estimate to the Zacks consensus estimate, currently stands at -0.17%, indicating a potential divergence from expectations. Coupled with a Zacks rank of 3, this suggests that predicting an earnings beat for Oracle may be challenging. Historically, Oracle has a mixed surprise history, beating estimates in 2 of the last 4 quarters. While past performance doesn't guarantee future results, the market will be keenly watching to see if Oracle can defy the current sentiment and deliver a surprise. But will these numbers be enough to impress the market, or are there deeper currents at play? We're diving into the intricate world of system integration next, exploring how to leverage powerful APIs for critical business functions. Streamlining operations, the API advantage. In the ever-evolving landscape of enterprise resource planning and business management, efficiency and seamless integration are paramount. For businesses utilizing Oracle R12, a critical aspect of optimizing operations lies in automating key processes, and one such process is the creation of purchase orders. This update delves into the practical, step-by-step methodology for generating purchase orders directly through an application programming interface, API, within the Oracle R12 environment. Understanding how to leverage APIs for such fundamental tasks can unlock significant time savings, reduce manual errors, and improve overall data accuracy. The process typically involves several key stages, beginning with establishing secure authentication to access the Oracle R12 system. This is followed by constructing the necessary data payload, which includes all the pertinent information for the purchase order, such as supplier details, item numbers, quantities, pricing, and delivery information. The API call itself is then made, transmitting this data to the Oracle R12 system for processing. Upon successful submission, the system generates a unique purchase order number, confirming the creation of the document. Advanced implementation might involve error handling protocols to manage any discrepancies or failures during the API transaction, ensuring robustness. Furthermore, Integrating this API functionality into existing workflows can automate the procurement cycle, from requisition to purchase order issuance, thereby enhancing procurement agility. This approach not only streamlines the creation of purchase orders, but also facilitates better data flow and real-time updates across different modules of Oracle R12, contributing to a more cohesive and efficient business ecosystem. The ability to programmatically manage purchase orders via API empowers organizations to build custom solutions tailored to their specific needs, offering a flexible and scalable approach to procurement management. This technical deep dive shows the power of integration, but what happens when the market itself shows unexpected movement? Prepare to analyze the subtle, yet significant, technical and order flow clues that can reveal the story behind a sudden stock price shift. Decoding market volatility, technical and order flow insights. In the fast-paced world of financial markets, understanding the underlying forces that drive price movements is crucial for traders and investors alike. Recently, Oracle experienced a notable intraday drop, a phenomenon that often sparks curiosity and demands closer examination. This event wasn't just a random fluctuation. It was a signal, potentially laden with valuable information for those adept at reading the market's intricate language. Unpacking such movements requires a dive into both technical analysis and order flow dynamics. Technical analysis involves studying historical price charts and trading volumes to identify patterns, trends, and potential future price directions. Indicators like moving averages, support and resistance levels, and trading volumes can offer clues about the strength of a trend or the likelihood of a reversal. For instance, a sharp decline accompanied by a significant increase in trading volume might suggest strong selling pressure. Order flow, on the other hand, provides a more granular view of the actual buying and selling activity. It examines the size and timing of individual trades, revealing whether the dominant force is institutional buying or aggressive selling. Analyzing the order book, depth of market, and execution patterns can help discern the sentiment driving the price action. In Oracle's case, the intraday slide could be attributed to a confluence of factors. Perhaps a large institutional sell order was executed, triggering a cascade of stop-loss orders or a significant shift in market sentiment, influenced by broader economic news or sector-specific developments. Understanding these technical and order flow clues allows market participants to better interpret such events, potentially identifying opportunities or mitigating risks associated with sudden volatility. It's about connecting the dots between price action, trading behavior, and the broader market narrative to gain a more comprehensive understanding of why a stock moves the way it does. These technical signals are vital, but sometimes the why behind a drop is even more direct. We're now going to investigate the core reasons behind that sharp, sudden slide, digging into the fundamental drivers of Oracle's recent price action. Unpacking Oracle's sudden slide, the core reasons. The financial markets are often characterized by their inherent volatility, and understanding the catalysts behind significant price movements is key for any astute investor. Oracle recently experienced a sharp, unexpected intraday slide, a development that naturally raises questions about its underlying causes. This wasn't merely a minor blip. It represented a substantial shift in investor sentiment or a reaction to critical news. To truly grasp what happened, we need to look beyond the immediate price action and explore the fundamental factors that could have triggered such a downturn. Several elements could be at play. Firstly, company-specific news, such as a disappointing earnings pre-announcement, a significant product development setback, or a change in leadership, can dramatically impact investor confidence. Secondly, broader economic factors, like rising interest rates, inflation concerns, or geopolitical instability, can lead to a general risk-off sentiment in the market, disproportionately affecting certain sectors or companies. For Oracle, a company deeply integrated into enterprise software and cloud services, shifts in IT spending trends, increased competition, or regulatory changes could also be significant drivers. Analysts and market commentators would be dissecting every piece of available information, from analyst rating changes and macroeconomic indicators to competitor performance and internal company disclosures. searching for the definitive reason for the slide. The suddenness and magnitude of the drop suggest a potent combination of factors, possibly including a large block trade, a critical news event that emerged during trading hours, or a significant reassessment of the company's future growth prospects by major market participants. Understanding these core reasons is not just about explaining a past event. It's about informing future investment decisions and navigating the complexities of the stock market with greater clarity. These in-depth analyses cover a lot, but what were the absolute highlights? Let's do a quick recap of the biggest stories we covered today, and then get you out the door. All right, that's a wrap on today's critical updates. We saw Oracle gearing up for its Q1 earnings, with Wall Street expecting growth. Then we learned how to streamline operations by creating purchase orders via API in Oracle R12. We also dissected the technical and order flow clues behind Oracle's sudden intraday drop. Finally, we unpacked the core reasons that might be driving Oracle's sharp, unexpected slide. What a rundown. If you found this essential, make sure to smash that like button, subscribe for more, ring that notification bell so you don't miss a single update, and let us know your thoughts in the comments below. For all the latest, follow us on our socials too. We'll see you next time.